Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Monday the 21st of October. Today was meant to be a day at which markets would have been responding to Super Saturday, this session of Parliament that Boris Johnson was going to try and get his deal through. Now, that didn't happen. A lot of sort of varying accounts of exactly the implications of this, but certainly it looks like the fact that the possibility for a no-deal Brexit is reducing by the actions of Parliament on Saturday, whereby they asked Johnson to implement the bill before actually voting on the deal itself. It's a very complicated way of basically trying to prevent a no-deal Brexit, really. And subsequently, what we've seen is a bit of volatility on sterling. Sterling opened lower initially on the disappointment of the deal not being voted through, but then, or the deal not being voted on, I should say. But then, since then, it's actually rebounded. So quite a strong move actually to the upside, and it's now testing highs again around that 129.85 area of resistance from last week. Interesting that you're not really getting any real direction at all across markets today. A bit of a sort of a neutral-ish move on the dollar, slightly weaker as we've seen the euro sort of ticking higher, but the yen is weaker. Dollars underperforming against the Aussie and the Kiwi as well. So there's little movement really to note about on major markets, other than you've still got these gains that we're seeing through the DAX. DAX is running higher again. It seems as though that anything that sort of goes Brexit positive with regards to less prospects of no deal is helping the DAX, and the DAX is jumping higher. FTSE still being dragged around in the fact that you got the correlation with that and sterling as well. So FTSE is still a bit of a negative drag with that regard, but DAX is the outperformer today. Gold, again, no reaction really on gold at all. Again, on the oil price as well, limited real reaction that we're seeing there either. So what we have seen is bond yields that are just ticking higher. The treasuries have been treasury yields have been going sideways, but the bond yields have been going up. Gilt yields have broadly gone up. JGBs have gone up. So it's sort of been one of the factors that have been the drag on the dollar, and certainly that seems to be still a case that's holding out at the moment. So limited real reaction on markets today, and to be honest, if you look at the data that we have out today, nothing really doing on the economic calendar to really note either. So that takes me to my chart today, which is Aussie dollar. Now, as sort of mentioned earlier, the fact that the Aussie is higher today, and it's actually broken out on a near-term basis above what is essentially a bit of a sort of a 2-month range mid-range pivot at 68.05. Now, holding that breakout means that the market is sort of edging now towards a test of the resistance of the September high of 68.95. Now, that would be a key moment if it could break out above that, because it would then start to challenge this key downtrend resistance again, and the downtrend has been intact obviously for the past almost year now. Continues to be a negative drag, but certainly the run of lower highs and lower lows continues, and if it can break out above 68.95, then that would be a key moment. And if you look at the momentum indicators, mid-60s on the RSI, that is multi-month highs, 2-3 month highs there. Actually, no, looking back, it's actually at levels not seen since, sorry, I've got that wrong, wow, so not for over a year actually. So that is sort of really gaining momentum on that RSI. MACD lines, a little bit less so, but still looking to move positively. Stochastics as well. So this is a market that's really starting to look a little bit more positively, and you can see on the hourly chart you're more positively set up and configured to buy into weakness. You've got this breakout of 68.05 on the daily chart, 68.10 here, basis of support there, and again above 68.35, again a basis of support, old resistance. through Thursday, became supportive on Friday and again today. So the market is gradually generating more positive momentum, and you can see that through the last few sessions. So the Aussie is beginning to gain ground, and a test of that 68.95 level I think is going to be crucial, because a closing breakout really does put pressure on this old downtrend, and I think that would be a key moment for the Aussie. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos, and also go to our website where you can sign up for our webinars.